Grain pricing tools, no margin, play the basis. Farmer's Keeper. Click the link below to supercharge your grain marketing.
Ryan, you ready?
I am.
All right, let's get started here. Well, good morning, guys. It's 8:31 on Thursday, December 8th. Thanks for everybody to being here. We know you're busy with field work, or a lot of our customers are out hunting right now that'll get this recording later. And again, this is recording right now, so we'll be able to send this out in case anybody's got to jump. We have a bunch of people texting us that are joining in. We have people on from Google Meet, from Zoom, and a couple other places, so we could double up on this and get more people involved. But we want to make this a good use of your time, and so we're going to give a few quick updates about Farmer's Keeper and what's going on, and then we're really going to get into introducing Ryan Darnell from StoneX, manages risk for all of your grain hedges, and specifically today about the 2023 managed pricing programs that we offer. And then we want to keep this conversational and leave open a lot of time for questions. One of the reasons we decided to do this before the 2023 managed pricing programs get kicked off is we hear a lot of the same questions about how are you able to hold margin for all these bushels? How are we able to deliver wherever we want? How are we able to use these pricing tools like HTAs and collars and accumulators that we're used to doing either on the board or directly at elevators? And so a lot of those questions are very common. And Farmer's Keeper never wants to be a gatekeeper to you to information. We want to take you directly to the source that otherwise most retail participants in the market, aka farmers in this case, aren't able to have that direct connection to clearing firms and who's managing the actual risk of holding hedges on things. So that's why we wanted to have this meeting to introduce Ryan so everybody knows who he is and really talk about what we talk individually with many of you as you have some questions and look at analytics on the farm, so you know how we're helping you with your livelihood. So some quick updates about Farmer's Keeper. We're in our new office right now. In Chicago, about half a mile away from Wrigley Field. We used to be just across the street that I'm looking at out the window here, and we'd love to have more of you come and stop by the office whenever you're in town. We're usually used to seeing you on the farm, but certainly we're of course open to having everybody over. So it's a really exciting time for us. And we've grown from in the past 3 years and 4 crops, we've grown from a couple million bushels to with a handful of people to now in the thousands of farmers with tens of millions of bushels across managed pricing programs and pricing tools. And we want to start, as we're more established now, we want to start being even more dedicated, getting feedback from you all, because all of our destinies are tied together, all in an effort to get you better prices on your grain and make that more efficiently for you. Many of you on this call today started with Farmer's Keeper doing our managed pricing programs, and we hear consistently from you, with those bushels that I put in a managed pricing program, I want peace of mind. I want to take off some of my risk. I want to make sure that I'm making sales and then have the flexibility to play my basis and deliver wherever I want. So we're going to talk more about that. But for those of you that have only ever done managed pricing programs with us, don't forget that most of the bushels actually that we manage for farmers all across the country are in HTAs and collars and accumulators that either you're setting according to your own grain marketing plan and your broker's ideas so that we can carry the hedge and so that you can deliver wherever you want. And so for those of you that aren't involved in that, you're able to go and sell HTAs or anything like that and then keep your basis open and not have to worry about margin. And that's really what we want to provide to you, because at the end of the day, we see ourselves as a service to farmers to give you these capabilities. So again, the purpose of today is really to talk about how is that risk managed, and what goes on there. We also have sitting right here, Mo Malley. He's our sales manager that's been with us for a couple weeks now, and he's our head of farmer relations. And really what his job is to head up our sales team and our account management team and keep refining and making a better service and product to you guys, which means getting settled and paid faster, more capabilities on what you want to do with your pricing tools and managing your risk. Mo's background is from CGB and the Board of Trade. He's done everything from flipping lids on the rail and loading train cars to making big trades with China on the rails and everything like that. So he's a really positive force in our team as we grow. And he's really helping us take all those things to the next level. Before I kick things off to Ryan, I want to say thank you to all of our customers that are watching live right now or that are going to be watching later on the recording. We've got guys just looking at our at our attendee list right now live. You know, we have guys from right near the panhandle of Oklahoma. Darren, I'm looking at you. To John up in North Dakota, to some of our guys down in Mississippi, and then of course all over the I-State. So thank you everybody for joining. We know you're really busy. We do all this for you. We do well when you do well too, and that's all really important to us as we start to build more of a community here with this, and as we start to grow. Another thing I wanted to mention is, if you're looking to follow us more closely in where we are, who we're visiting, what we're up to, we found most recently, I don't know if Rick is on the call yet. He's in the attendee list, but one of our good customers in southern Indiana said, you know, Nick, I get a lot of my information out of TikTok. Those of you who know me personally, I'm not really a social media guy. I'm not sharing what's going on with me, but TikTok has been really great for us for bringing in some of you on this call that didn't know about us before that. So we can bring more farmers into this community and give them more of these capabilities to carry the hedge without margin risk and then be able to sell their grain wherever we want. So I just want to say to everybody on this call and everybody that's listening to the recording later on, thank you so much for your business. We know that this is your livelihood. We know that you live and die by your crop and how much pride you have in it. And our hands might not be out in the mud with you, although sometimes they are when we're in the field. But we're right there along with you, and our livelihoods depend on the crop too. And that really means a lot to us. And we know you're trusting us with your livelihood. So thank you for being customers. You guys are early customers to something that's really growing and giving capabilities to a lot of farmers. So with that, I want to get out of the way of talking about all this dog and pony show stuff and introduce you to Ryan Darnell. For those of you who have never spoken to Ryan before, Ryan manages risk at the trade desk at StoneX for their physically settled commodities of corn, soybeans, and wheat. And over the past 2 or 3 years or so, we've really built a very strong partnership to help manage your risk, whether you're doing any type of pricing tool like HTAs, collars, accumulators, all the way to managed pricing programs. So a lot of you on the call, as I'm looking here, and a lot of you that will be listening to this recording later that are going to get it, who weren't able to join today, remember when it was me personally calling on you and begging you for your bushels for some of you 4 or 5 crops ago to do some crazy cockamamie idea from an energetic Greek guy from Chicago. And we really appreciate that. And we want to keep meeting more of you out in the field. But Ryan is really who has structured all this and put it all together. And he's a really good partner for it. And he's a big piece of how you are managing your risk and your livelihood at home. And we want to show you behind the curtain and talk about that. So one more thing, we're going to try and leave a bunch of room for questions after Ryan's done talking. If you have any questions, in the bottom right-hand corner of your screen, there's a chat box because most of us are muted. If you're able to unmute yourself and you know how, certainly do that and ask any question you have to Ryan. And we're always accessible with this anyway. Or you can chat in that bottom link and ask any question, or also text your rep or text me if you have a question that you want to ask for Ryan, And if we have a shy crowd yet that hasn't had their coffee yet this morning, I know some of the questions that you guys ask about how this works behind the scenes, and maybe I'll prompt Ryan if we're being shy this morning. So with that, Ryan, thanks for being on today. Can you introduce yourself to everybody?
Yeah, certainly. Thanks everybody for jumping on. I was just telling Nick the other day that I'm always really excited for these kind of opportunities, and frankly, I hope we continue to do more and more of these because, I'm going to go into this a little bit later, but transparency is the goal here. It's kind of the whole reason that this thing exists and the way we've set it up. So real quick, I'll just give you all my bio, and then I'll quickly cover the background of these programs, how they got created. I think that's useful for people kind of who have just come into them or who have never heard the story to know why they exist and what the goal is. Talk briefly about this year's portfolio, the strategy, and then leave plenty of time for questions. So my background, I grew up in West Texas, ended up recruited to play football at Harvard, went to Harvard, took kind of a big change in course. I always thought I'd be a Texas guy forever. After Harvard, I went to Deutsche Bank on Wall Street. It was in the middle of the financial crisis, so the bond desks weren't hiring, but all the banks wanted to get into commodities. So they said, "Oh, you're from Texas. You must know about agriculture." Never mind that I grew up in a desert, and they grabbed me onto the commodities desk. So I started trading agricultural commodities at Deutsche Bank about 14, 15 years ago. Ended up running that derivatives trading desk. I also launched our European trading desk, trading things like sugar, palm oil, French wheat. And then after about 7 years at Deutsche Bank, I left with the Deutsche Bank management team to start a private equity-backed venture to acquire grain elevators and build physical trading capabilities in the U.S. and North America. I did that for a couple of years. Then for personal reasons, my wife got into a medical training program in Massachusetts. So we moved out and I was ready to leave New York City. It was a fun time, but I'm not really a city guy. So we went out there. We came out here to Western Massachusetts, which is actually big tobacco farming. I didn't know that there was ag up here, but a lot of tobacco farming up here. And so I started a consulting business and eventually latched on with StoneX, became part of the StoneX management team and launched these products, these managed pricing tools. The background on the managed pricing tools, it's an interesting story. So Cargill had come out for a little while with their pro pricing, and the co-ops actually came to StoneX and said, we need something to compete because everyone's really excited about pro pricing. It's the new kid on the block, and farmers are signing up in droves for this thing, and we need a tool. So it was actually the year before I joined, and they developed this pilot program, and they ran it. And then I came in, and they said, people weren't too happy with it. We didn't have a great reception, but we think there's something here because this is the first time we've ever had customers beg us to enter a space. So I went and took a look at the program, and I was really curious why people weren't happy, because it turns out the program had a floor under it the whole time, so it could have never fallen significantly, and it outperformed the market after fees, like the average, and yet people were still unhappy. And I was kind of blown away by this. I was also generally blown away by the whole concept that people would hand off their grain marketing, frankly. I guess now that I've been in the industry a little bit longer, I understand, and it makes a lot of sense why guys want to specialize, why some guys want to play in the dirt. They want to focus on maximizing yields and have help with their grain marketing. But at the time, this whole concept was new to me. So I kind of tried to come in and say from first principles, how do we want this program to look? And the first thing we decided was transparency. People have to know how their price was achieved, because you can't really say if a price is good or bad unless you know why you got that price and what the logic was behind it. A price doesn't mean anything if you don't know what your cost of production is and all these other things. So we were the first. So that was kind of the big overhaul that I led. I said, we've got to be the first ones to market, and we were the first ones to start publicly posting all our prices every day on a website, posting market commentary, posting risk, like what percentage is sold of the program at any given time. Since then, there have been a few copycats. I think some of the biggest commercials have have tried to start doing that and get it away from paywalls and other logins and stuff. I'm a big believer that if you're going to settle a program like this and someone's going to trust their grain pricing, they need a daily update and they need to know exactly what's going on all the time. So also, it's an open door policy. Anybody can ask me anytime what's going on with the risk in these programs. So that was the beginning. And I also felt that people needed to have more control over their programs. When Cargill started out pro pricing, and I know there's probably been some people who have heard about, I don't want to disparage a competitor, but my understanding is that there's some negative, things going on in the market right now with some concern about pricing in that space. When I first kind of looked into these programs, the idea was, well, we're so smart, we know the market better than you, and we know everything about grain marketing, so you should trust us, and because we know better than you. I coming from a Wall Street background, there's a long history of Wall Street, acting like they know what's so great for everybody and being smarter than everybody else and actually underperforming the market. There's a ton of research on this, and there's a reason that people have been shifting to low cost index funds in waves, like trillions of dollars over the last 20 years, because there's nobody who has a crystal ball and knows how to beat the market. So, the first thing I said was, this is ridiculous. I was a proprietary trader. I was very profitable for a number of years, but that entails big swings and it's a volatile business, and it's not something that I think the average farmer should be in. And so what we did was we said we want to have rules-based, kind of defined programs with specific goals. And the goal here isn't to beat the market. The goal is to, maximize kind of the risk management. It's to achieve a goal that makes sense for a given subset of producers. And not every producer is going to have the same goal. So we started by saying, hey, let's just at least bucket this into an aggressive program and a conservative program. The conservative one's going to be kind of rules-based, algorithmic sales to just make sure we get a steady amount sold throughout the year. And if there's a big rally, we scale up our selling faster so we don't miss it. Pretty common sense. And then we'll have a committee that's a bit more discretionary that can kind of swing for the fences and we'll see what we get. And I was shocked because I always heard farmers are so conservative, these guys, they're like kind of down to earth, like nobody wants anything too crazy. 99% of our enrollments were in the aggressive program. Everybody wanted us to swing for the fences and hit home runs.
Aggressive means good, right? Does that mean you're going to get me good prices if you're aggressive?
That stunned me. I was not expecting that at all. And then the next year, the aggressive program underperformed and the conservative algorithm outperformed. Which was, and again, it's somewhat random, but the conservative program, it scales up selling. So the market spiked that year, and the conservative program, sold a bunch, and then the market came off. So that one looked great. The algorithm looked genius, and the committee kind of got bullish, and they didn't sell as much, so they didn't do quite as well. And everyone goes, wait a minute, why did the conservative outperform the aggressive? And I was like, well, it's not like we'd offer a program where one always does better than the other. So then the next year, everybody switched to conservative. And all of our enrollments were in conservative. And I said, okay, we got to take a step back here. I don't want people signing up for programs just based on the name of the program. So I want to make sure that people are kind of, getting into the specifics of why the program exists. So we started to switch to more of a, we gave them new names. We created Abacus Beacon, and then later on added Foundation and Target. And a lot of people said, what are those names? I don't know what that means. And I said, good. Now you have to read the description. Don't just pick it because it says aggressive. So we wanted to offer more tools that people liked. And then we went full circle, frankly, because a lot of farmers said, this is complicated. And the reason I'm hiring you is that I want to not have to stress about this. And I don't want to try to understand all the details of these strategies. So we said, all right, here's what we're going to do. For farmers who want to not stress about this, and by the way, we still have our individual programs if you do want to have a bit more specificity. But the typical farmer who's in these programs wants to get 10 to 20% of their bushels out of their hair and have somebody else doing it. And know that it's being managed competently. So we're going to build a portfolio that should work in a variety of different scenarios. So we took 4 core strategies, 3 of them rules-based. There's basically 0 discretion in them, and there's nothing about beating the market. And we blended them into our Portfolio Plus program. And I'll talk, briefly about what each strategy is, and how we evaluate them, and then shut up so you guys can ask me questions here. So the basic idea is we have a floor program, our foundation program, where we try to get a floor on at least 25% of the grain that's enrolled right out of the gate. We do a few things. It's all set on day one. There's no discretion. I'm not trying to call the market there, but we do a few things at the beginning of the program to try to cheapen up that floor. I can go into more details if people are curious, but there's some ways we can sell options and use some structured products, some over-the-counter options to make that a little bit cheaper. So we try to get the cheapest effectively floor on the program that we can get on 25% of the bushels. On 25% of the bushels, we have an averaging algorithm. I know people hear algorithm. Some people love it. They're like, oh, great, brilliant artificial intelligence. And other people are like, what is this nonsense? At the end of the day, algorithm is just a fancy way for saying it's rules-based, and we make sure we're selling consistently throughout the year. It has outperformed the average, in most years. But some years it's going to underperform, some years it's going to outperform. But it typically does. That algorithm was specifically designed to capitalize on one type of market, which is a very common market. You get a big rally, something happens in the summer, there's drought concerns, there's some big event, and then you have a big pullback. And whenever that happens, the algorithm typically outperforms substantially. And it was intentionally designed that way because one of the biggest concerns we heard was, there's plenty of old jokes about this too, about farmers who don't sell when things turn bullish and the market spikes. And we wanted to make sure that we don't miss those. So that's really the algorithm's key focus. Then there's a 25%, since we knew that there's a number of farmers who do want to, achieve that kind of upside, there's a 25% allocation, which is focused on aiming for the upside, trying to get really high prices. We're selling call options at numbers that are like, we hope it gets there. It may never, and if it doesn't, maybe we'll roll those call options down. But the goal is we're trying to collect premium and trying to get some sort of really high number, basically. And that may never get there. And then finally, we have this 25%, what I'll call swing factor, which is we have a committee. And our committee has outperformed the market, but like any group of people, it's fallible, and so it's varied quite a bit. Your mileage may vary, sort of thing. Again, it's actually done great over kind of a 6-year period, but there's going to be years where they don't look so smart, and other years where they nail it. We did quite well this year, actually, outperformed the algorithm and everything. And I chair that committee. I try not to do. I don't form strong market views. I don't say, I think the market's going up, so we're going to wait. But I do sit with the guys who do that and say, all right, well, this is a reasonable amount of risk to take. This is the right way to put on that trade. And the nice thing about the swing committee is, when things are going crazy like they were in the last, 18 months with the war and commodity price rallies, we were able to say, hey, let's slow down the selling a little bit and let this thing run. This isn't a normal environment. And that was why the committee really nailed it this year. And so I think it's nice to have that little swing factor that can kind of push that other 75% a little bit heavier or lighter in terms of percent sold. So that's the 4 programs that are in it. And the last thing I'll touch on real quickly is performance, because I think the biggest frustration and challenge that I've had here is helping farmers understand what makes a program successful. How do I benchmark success in the program? And if you chase high prices, if you just want to sign up for the highest performing price program, whether that's a managed pricing program or an IB running around the countryside telling you that they got X for their farmers last year, you'll always be disappointed. There's lots of research on the finance side for index funds and mutual funds that outperform in one year are almost always inevitably the ones that underperform the next year, and vice versa. If anything, you should be doing the opposite. You should be finding the worst performing programs or the worst performing mutual funds and buying those, and they typically outperform. And so, not that everyone will necessarily go do that, but if anything, the research says you should do the opposite. So if we're not going to just chase the highest price program, then how do we think about a successful program? And a lot of people just compare us to the harvest price. We understand that, we're cognizant of it. At the end of the day, it's always going to be an emotional thing, like, hey, this is what I'm getting for the grain I'm selling off the combine, and this is what you got, and it's higher or lower. How does that make me feel? But ultimately, what you want to look at is kind of what an average marketing program would have attained over a 6-month period, or 9-month period, however the duration of the marketing program is. And then, but then there's one other piece, which is what was the price I needed? Because what I always tell people is, at the end of the day, if I really just thought we were going to beat the market, I'd just go sit on a private island and do this, right? I wouldn't waste time trying to market this to farmers. So the goal isn't to just beat the market. The goal is, when do we outperform the market and when do we underperform the market? And that's really the thing that gets me the most excited about these programs, and like why we developed the algorithm the way we did and all these other things. And here's the key. Our programs outperform when the market tanks. We have an idea of what cost of production is for our growers across the country. And when we want to be really high is the year that farmers are under a lot of stress, when they're bankrupt, when there's going to be bankruptcies, when guys are coming off the combine and prices are crap. That's when these programs need to really outperform. And if we underperform when prices are at $8 and everybody's hitting a home run, yeah, I know some people are going to quit the program and say, well, I'm getting $8. I don't need you to get 650 or 7. But, the fact is, there's going to be a time when those guys are selling below cost of production if they don't do any risk management and they're just selling off the combine. So so that's really how I think about these programs, is they should probably underperform in a scenario where the market is a home run for you guys, and hopefully you don't have too much in these programs. So hopefully you are hitting a home run on 50% or more of your grain. In my experience, most guys don't forward sell more than 50%. So it should be a home run, what you're getting off the combine. But again, I hope we're saving some people's bacon in the bad years, and that's when we're going to really say that this program was a success.
Ryan, I've got a question for you there that a lot of people ask. That's got to do with the market either running up really high or falling down really low, just according to whatever strategy it is, whether it's a managed pricing program or where someone's got hedges on the board, or an accumulator, or in some type of a floor that they set up. So we're the amount of bushels under management total between HTAs and collars and accumulators and managed pricing programs now is somewhere in the mid to high hundreds of millions of dollars worth of value of that grain when it goes across the scales, and probably by the end of next year is going to be above $1 billion worth of grain in this our group of customers that are listening in here live or on the recording. We've seen the past couple of years, it's pretty crazy. We're not sure what's going on here this harvest, but we've just seen prices take off the last 2 or 3 harvests out of nowhere when people were selling off the combine or selling ahead of time. And that puts on a lot of margin risk. That's a big concern for guys. And even if you're listening to this and you're not doing anything on the board that's marginable, or you're purposely using Farmer's Keeper to set your HTAs so that you don't have to worry about margin risk, how does StoneX in the background manage that? If, for instance, we had some big price triggers hit this morning because November 23 beans finally breached $14 and a bunch of soybeans were sold. What happens if we see $20 beans, or the floor program happens and then we see $9 beans? How are you able to keep the store running when someone's got to be paying the margin calls for what's going on? What does that look like? Because that's a big part of your job, separate from just pricing, the managed pricing program specifically. How are you managing risk for everyone? Because we hear a lot of times, that this just sounds too good to be true. You guys are selling me some type of smoke and mirrors. This isn't possible. Can you talk a little bit about how you're managing that margin risk and how you're able to work all of that?
Sure. There's actually a popular misconception that people think the fee that they're paying for is for my expertise. And that couldn't be further from the truth. We actually charge nothing for what we call the managed pricing component. Our managed pricing programs cost about the same as hedge to arrives and accumulators and all these other things. They're all priced the same way, and it has absolutely nothing to do with expertise or how complicated the product is. And it has everything to do with our estimate of how much capital that could require us to post in margin. Because at the end of the day, what we're doing is, we have a certain amount of equity capital that we hold, and then we have the ability to borrow from banks. So we have a bank line that lets us borrow against the equity in all of our contracts. We also hold physical grain that we help finance for elevators around, not just around the country. We finance grain for traders around the world, not just grain, actually, also soft commodities, a variety of things. So because of all this, we work with banks pretty closely, and much like the way like a big commercial would have a borrowing line with banks, we have the same thing. So we're able to borrow to finance the vast majority of the margin calls, but we still have to put up a certain amount of equity. And so, what we do with every single trade is we look at, for that type of trade, what's the likely amount of margin that I could be on the hook for, and then we basically figure out how much equity do we have to set aside to cover margin calls, and then how much can we borrow from the bank if we need to, and that's how we determine our fees. And so I mean, at the end of the day, that's kind of all there is to it. But we think that's I guess it really is worth kind of hammering home the point that we are a big publicly traded company. So we're going to be there. We're not like some fly-by-night operation that raised some startup funding or anything like that. We've been in the grain business now for at least 50 years. I think it's more like 80 years. And so there's a commitment to being there. So we're pretty conservative about how much capital we set aside, and we actually cap the number of bushels that we'll take into all our various programs. And frankly, like, Nick's been doing so great growing that we're hardly even working on trying to get more producers. We've been focused on working with consumers and trying to balance out our book so that we won't, so we can continue to keep prices lower and sustainable for you guys.
So then to clarify, if someone listening to this says, I've only really done managed pricing programs, that's why I was listening into this, I want to know a little bit more about who's this guy that's managing the strategy and risk behind it. But you know what? I deliver to multiple elevators, and I interest on my operating loans so high, I don't want to have to do anything on the board by hedging off my futures. And they do an HTA, and then we see corn run up to $9. Someone's paying that margin call. How are you guys okay with that then specifically?
With that particular, so sorry, so someone sold grain.
If someone locked in an HTA today at $6.50 corn, and the market runs up to $9, someone's making that margin call. This sounds too good to be
we're
true.
making that margin call. So we'll typically be holding the futures against. So we'll have the physical grain purchase contract, and then we'll turn around and hedge that on the exchange. We'll be posting that $2.50 plus in margin, and then we'll turn around and borrow, say, $2 or $2.10, $2.20 from the bank, and pay interest on that. And then and then 30 to 50 cents of that is direct out of our pocket, which again we've set aside at the beginning of the year based on our total bushel enrollment.
Gotcha. So it time check here. We've been on the call for about 34 minutes. We want to keep this to an hour or less. Guys, start thinking, do you have any specific questions for Ryan, for those of you that are on here live? If you do, you can chat them below, or you can text them to us, and I can ask them to them. But while people are getting those questions going, Ryan, we've got, just looking at who's going to watch this and who's on live, we have customers here that are growing corn, soybeans, and wheat all together in their farm. We have some of our customers in Iowa that want to grow as much corn as they can, and beans are just there as a part of the rotation. Although that certainly is starting to change as we see, $15 plus cash beans in certain areas. There's just such a diverse mix in terms of the farmers that are selling grain this way, and more every day as we brought in from referrals from all you guys and from people hearing about us on TikTok and social media and everything. How it just seems like, we've got customers that are 150 acres. We have customers that are 18, 19 years old. And we have customers that are 82 years old and customers that are 90,000 acres. That seems like a lot of different people and things to put together. versus, if you deliver to the local co-op, everybody knows each other for generations. Everyone's in a similar type of boat in what they're growing, maybe not in size, but that's a pretty diverse range of people to come in together. How do you view that?
How do I think about that?
Yeah.
Yeah, I mean, I think, again, one of the challenges is that with these programs is, unfortunately, it is a bit of a one-size-fits-all. It's nice that we have the 4 individual buckets, so a producer can come to us if a producer can come to us and has a coherent idea, we can help them figure out which the right strategy is for them. But at the end of the day, we are a bit limited in that, at least from our kind of portfolio plus, it's a bit of a one-size-fits-all. So I think for everybody, it's really just the baseline for what is a good portfolio, right? And so I think like no one's going to get hurt by starting with a certain percentage with, like 20% or less of their volume in that kind of program. And then it's really what they do with the other 80%, which is where that customization comes in. Again, just like if someone's doing their retirement account, we'd say like make sure to have the percentages would be different. You'd say probably do 80% into like a low cost index fund, and then if you want to kind of punt around, if you want to bet on your favorite stocks, go ahead and do that with the last 20% or something. I'm sure that's what your financial advisor would tell you. I'd switch the proportions around here just because of the fact that I think farms need a little bit more customization, and how much you forward sell is going to be limited by things like potential yield risk. So
right.
But again, I think starting with that, but then again, Nick's building out a great farm consulting product. So I think someone can come and ask how what's the best way, not first off, like what's the best way to get the right mix and portfolio of sales, how much should be managed pricing, how much should be kind of individual hedge to arrives, how much should be off the combine, and also like, hey, I want to make a sale here, I like the price, what's the best way to get that done? Is it managed pricing? Is it HTA? Is it on the board? Is it with my local co-op? Depending on how much basis flexibility you have for shopping, so on and so forth.
Yep. And there's a couple people listening and a couple people that will be listening, not live, that do a little bit of consulting with us to talk about what their risk tolerances are in general, helping them with their break even and everything. And although that's not core to our business today, that's something else that we offer to people looking beyond just what am I going to do in a managed pricing program, or hey, what's the best way to execute an accumulator right now if that's what I'm looking into. We've had some questions come in. Brian's asking, do you set up your pricing algorithms based on each individual crop year, or are you taking into account the value of the following year's crop that might also benefit in an increase in price? So if we see, for instance, the following year, we think that corn is going to run up, how does that factor into pricing a December 2023 corn program when the outlook more than 12 months out may be higher for whatever reason?
I'm glad you bring that up because it poses a funny it poses a funny thing that whenever you talk to risk management people versus farmers, farmers never want to, historically farmers don't want to sell. They think it's going higher, and I'm always flabbergasted by that because of that point, which is that your farm value just went up because not only is this year's crop worth more, but the next year's crop and the next year's crop. So if anything, I think that should encourage you to sell more aggressively and faster, knowing that, hey, even if I missed the big rally this year, like, I'll continue to make money as things continue. But specifically talking about our algorithms, we don't really think about the next year, but we do take into consideration, where the current price is. So it's not totally blind. So we have a couple different algorithms. So the main one, the kind of averaging algorithm, it's just purely looking at long-term. It looks at long-term and short-term averages. So it basically says, hey, when we're above the long-term average, we need to be selling consistently. When we're below that, we can take a pause and be patient here. But if we break below short-term averages, suggesting that there might be kind of a bigger momentum shift, then it'll speed up the selling again. And so its maximum kind of selling is if you get this kind of like, markets going up and up and up above long-term averages, and then starts to peak and spike down below the short-term average. So we're really trying to catch that, that kind of that upside down U is what it's trying to hit. So it'll underperform, if the market just keeps running like all year long, it'll underperform because it'll be selling aggressively into that. But if you get that kind of U-shaped market, the one that farmers tend to regret, like, oh, why didn't I sell it all in July? That's when that thing really hits a home run. So no, that algorithm doesn't really consider broader things like cost of production or whatever. It's really just trying to nail that U and make sure that if the market is like straight down, it's ahead of average, which it also does. So
that's the future side of things there. But Darren in Southwest Kansas, who I'm thinking of right above the panhandle of Oklahoma over there. Hi, Darren. Darren's asking a good question along those same lines about different crop years on the cash side of things, specifically on basis. And what he's asking is, I think one of the biggest risks on my farm for 2023 is basis risk. Something we hear from you guys every single day, and we're seeing it in a lot of different markets. And again, Darren is in an area this year where we've seen a couple tough droughts in a row where there's a big grain deficit, and the feeders in those areas are actually pulling in a lot of grain. And for instance, in his area, cash basis for corn for March 23, so this crop is old crop that you just harvested, is a couple months from now is $1.50 over. Those of you in certain areas of Indiana and the Dakotas and everything probably wish you had ever heard a $1.50 over basis. But then when he looks out to new crop of December 23, it's 40 over. That's a $1.10 difference right there. Forget about what's going on in the futures market. So how can we help guys that are looking at huge spreads just within time of delivery in their basis? And Darren, I want to add one more thing. A lot of you are seeing big spreads in basis between crops, or between elevators. For instance, the ethanol plant in town that's a little bit farther away might be bidding $1 over, but they're 40 or 50 miles away, which for many of us is too far of a haul. Those of you in the Dakotas and everything, it's, that's down the street. But and then the local co-op might be 50 over, right? So even in between elevators, there's a huge variation in what that cash basis price is. So how can we help manage that risk there of just the pure basis risk of where I'm going to deliver?
Yep, absolutely. So a couple thoughts on that. One of the biggest challenges with basis is that's a much more local problem. And so a managed pricing program certainly can't ever answer your basis risk. But the good news is that's why Nick's here and Farmers Keeper is here. Nick's, again, built out a really nice kind of consulting product that's more specific to the individual farmer who wants to figure out their basis marketing. And we, help provide data analytics for Nick on that front. He's also building out his kind of trucking and optimization to help farmers get the best basis. And so I think ultimately, there's a different product for a different situation, but specifically for the managed pricing programs and for the StoneX products, I think there's a big misconception when people sign up for them. They often just kind of say, all right, well, that's done. I put that in an HCA, or I put that in a managed pricing program or an accumulator, and I'm just going to let it go. But the real kind of secret sauce, the real great thing about the StoneX product is that it gives you complete basis flexibility. And so that doesn't mean that you're supposed to forget about it and then go set the basis in November when it's all done. What that means is that you're supposed to be working that basis now to optimize for you. So if things get tight in the summer and there's if there's a bit of a squeeze in the summertime and suddenly basis spikes up, and that actually is kind of, and you're even seeing that basis pick up for later in the year, you can, that's the time to lock it in, or vice versa. If basis is really bad, but your board price is good, you can roll it, which is, leading to the next question. I mean, you can turn around and leave that basis open and roll it to March or May and hope for a bit better basis. So the basis is, if you have a lot of basis power, in fact, I think one of the biggest ways that StoneX products create value for you. We've had many farmers say that just by not fixing their contract with a local elevator, just having that flexibility to shop, that they can get like a dime. The kind of average number that I hear is that a typical farmer gets about a dime push for kind of having that grain sold elsewhere and not being beholden to an elevator. And so I think that's really our biggest value if you have the ability to shop. But, you know, again, it's not just that dime push, it's also the ability, the timing, so that when that basis does spike, you can, you know, when, because these elevators, they get caught short, right? Like they're always out there making sales. You know, if they turn around and make a big sale to a mill or to like a feed mill or a, you know, or an ethanol plant or something, and then they need to know that they need to get a certain amount of grain guaranteed, you want to be kind of ready and waiting to take advantage of that.
Or in markets like in Darren's case, it's not even that they've made commitments for sales, and certainly they do, but it's just a factor of not enough supply because of drought. Or we saw some of our customers in Nebraska this year where there were some pretty bad hailstorms, just the whole crop being knocked out in certain areas. You know, I was waiting for a question like this to bring these two things up, which you had mentioned, which was, we're with Ryan's help in a lot of cases, we're building out more analytics around historical basis levels to just see, relative to what's going on, what are your prices like. You know, I know a lot of you older guys here that have been watching your cash markets for decades at this point know a general idea of what basis looks like at what times of the year, but you know, you don't really have the ability, unfortunately, to look back like we can in the futures market and say, this is where basis was at this elevator at this date. And we're starting to put together more of that for you. And we do that for some of our consulting customers where the cash market is much more applicable to their overall profitability. And so, you know, I'm seeing a few people on this call that are in what we call co-op land in central Illinois, let's say, where there isn't really that much of a difference in their basis market, because there's a very obvious best elevator to go to and a best bid, and the difference between bids between local elevators is not quite as large as it might be in certain areas where, again, the ethanol plant is bidding $1 over, and then the co-op that's right there in town 5 miles away is, you know, 55 over. And all of that is really a function of transportation. Some of you know, some of you don't know, we started a freight company and a freight brokerage, and Terry, sitting behind me here, actually directs dozens and dozens of trucks a week, and growing, for large commercial merchandisers and farmers direct. You guys are customers that are looking to ship outside of their local area. So for you as a farmer, you might know of a bid further out there, but you don't want to put the miles on your trucks. You can't find drivers or anything, but even with paying for transportation, it still makes sense to go further afield to get a better bid. And for those of you guys that have used that already, we're able to find you trucks either out of the field or at your bin site and get you that and help you capture that stronger basis, or just add to more trucking capacity if you're not able to do it. Like some of our customers that are producing more than 1 million bushels of grain that just need trucks to get it out at harvest there. So that's been a big value. And another plug for that service, we're hauling today for, I don't necessarily want to mention on the recorded call, but think about the ABCDs and some of the biggest merchandisers in the country. Terry is managing a network of truck carriers and hoppers that are hauling DDGs, corn, soybeans, wheat, soybean meal, coal, salt. And we are using that as its own business unit for profitability for Farmers Keeper, but also as a way for us to be more intertwined with the elevators that you and we are selling to, so that they're a customer of ours, not just with your grain that's going in there, and you're a customer of theirs direct as well, but also that we're helping them with their whole reason of their existence if they're not an actual processor themselves. So, for instance, a co-op that is aggregating grain in their local area that would actually, you know, be selling it further afield to an ethanol plant. We're starting to work with dozens of shippers like that around the country, whether they're just a merchandiser on the board or own physical assets out there because they're crushing beans or something like that, and starting to move those trucks for them so that we can say, hey, these are Farmer John Smith's bushels. Farmer's Keeper and Stone are going to do the exchange with you to sell you those bushels. And they say, oh, wait, Farmer's Keeper, those guys haul trucks for us. They keep our machine moving here. So we want to use that as a way to get more involved with our elevator partners to be providing more of a service for them. And that's available to all of our customers out there if you're looking for more truck capacity. That kind of goes into the next couple questions, and we're getting a bunch of questions in from text here too. But John is asking, and Ryan, you kind of answered this. I'll knock this one out here. What contract months
to that as well? Yes, sir.
Okay. What contract months are available using the managed pricing program, specifically with corn? And can you sign up and deliver and sell grain in the spring or summer? So number one, we are always offering, whether it's for this crop or the next crop, you always have the availability, even though pricing might not start immediately, you always have the ability every single day of the year to commit bushels to a managed pricing program for corn and soybeans. And that's always going to be available for the futures to be priced off of December corn and November soybeans. So right now we're still filling up for our round one of 2023 December corn and 2023 November soybeans. What you can do though is Ryan and the whole portfolio strategy is going to be pricing those futures prices off of Dece corn and November beans. However, for those of you that aren't going to sell that out of the field, you can roll those contracts forward and capture carry if there is carry in the market and deliver that out in the spring or the summer. Those of you who have been with us for 1 or 2 or 3 or 4 crops that do store grain as a part of your local basis strategy, which again, we can help you with all those analytics, you are able to roll those forward and do that. We also do offer March programs at certain points of the year. Those are not available every single day of the year for you to sign up for, but we do that every once in a while. Currently, we don't have those open. Those are actually already up and running and pricing already. And then another thing I want to mention is if you're looking at doing your own individual pricing tool, whether we gave you some help with deciding on where and when to make a sale on it, or you have your own grain marketing plan that you just want to place an order with us for an HTA, for instance, or an accumulator, you can set that actual hedge on whatever crop month you want. So if you're looking at doing an HTA and you know that this certain amount of your crop is going to go out in March or July, let's say, before you sweep out the bins, you can directly have your HTA or your offer level or your accumulator, your collar for a July 2024, July 2023 futures month if you also like that price. So you can directly do that on any pricing tool you want. And if you're in a December corn program, you can still roll out those bushels and deliver them later. Ryan, you said you had some feedback on that too.
Yeah, I was just going to say that same thing, and also that if they know in advance that they're going to want to roll, we can probably just book it with a later delivery date on the physical bushels. They'll still be priced the same way as you say, but that way they can kind of take away any uncertainty around roll fees.
Yep. There's some good cash basis questions coming in, a couple on text, and I'm going to put a couple together. Brenton asked, I want to know, how do you guys handle push bids from the elevators, and if we're pooling together bushels to get people better basis at times? So 2 different things there. Many of you, some of you listening live on this call, certainly a lot of you guys that are in the recording, you may get your special push from your elevator that's better than the posted bid. Either because you're really easy to work with, you've got bins that are really close to town and the elevator knows that they can rely on you, or some of you guys are delivering more than 1 million bushels of grain to one elevator every single year because it just always makes sense to go there. And so because they want your grain, they are going to give you a push that is better than their local basis bid. So that's separate from us pooling bushels. So for those of you that haven't done that through us yet, if you receive a special push bid above what the stated basis is on your own, you are able to apply that to your bushels that you sell through us, whether that's, again, on any individual pricing tool or what we're talking about today, which is the managed pricing programs. All you have to do is let your merchandiser originator at the elevator know, hey, I know you're posted at 10 over and you're going to give me 20 over. I'm going to sell you 100,000 bushels at that level to get that push. I just wanted to let you know I'm going to use 50,000 of my own bushels for it that we can price right here, right now. But I'm also going to have an exchange done that StoneX will call you about that will fulfill the futures portion of the rest of those bushels. And that happens all the time with us, especially for those of you bigger guys out there or guys that are really close to a processor that wants or needs your bushels. The second part of that question that Brendan's asking is about us pooling bushels together and getting pushes. So there are certain cases where, because we're working with in the thousands of farmers all across the country, and certainly some of you that are going to listen are neighbors with each other or related to each other that live close together. Today, we are still figuring out and working with our elevator partners to say, what can we do aggregating the bushels that Farmers Keeper has as a whole, regardless of one individual farmer, to get people a push for that. And that's kind of a balance that we're still working on, that we want to be able to do to you as a price service to get you a better basis bid, but then also make that make sense for the elevators too, to say, hey, it's easier for us to go to one source like Farmers Keeper, or like a processor might do to a co-op, and say, I'd rather buy 1 million bushels from one entity that's going to aggregate, a bunch of 5,000 or 10,000 or 100,000 contracts together. So we kind of toe that line because we see the elevators as our customers too. And we don't want to put them in a position where if you deliver to that local co-op and Farmers Keeper is aggregating bushels, that they're overpaying in their eyes for bushels that they were already going to buy anyway. So today it's still a case-by-case scenario. But again, if you get a push from your local elevator because they need the grain or they just really love working with you, or the guy's your brother-in-law, you can capture that when you set your basis with us. And if you want to have conversations about where your best basis bid is and what you want to do, many of you on this call already do that. You can do that and talk to us. Or if you're in the field and you're finishing your fall applications and you're not looking at your phone or anything like that, you can call any of us and say, hey, what does my basis bid look like in my area? I'm not looking at it right now. Just purely tell me, where is my local basis right now? And we're more than happy to do that too, let alone on the consulting analytical side of where basis is at. Another quick question here that I saw Bo ask is, who pays for the trucking when you use us? So when let's say, Bo, you've got a really good bid that's further away than you want to send your trucks, or you just don't have enough drivers right now. What we do is you are not going to directly write a check in most cases for the haul of those trucks. So if you get $1 over basis and trucking costs 20 cents a bushel, when you net your settlement check, when you get that back after delivery, you will net $1 minus 20 cents for trucking and net yourself 80 cents. So you're not writing an extra invoice for any of that trucking capacity. Just so you guys know, when we are hauling grain for commercial merchandisers that are looking to move, DDGs from point A to point B, Terry moves a lot of DDGs back here. In those cases, when we're facing the elevators directly moving grain for them, regardless of where it's picking up, they are specifically writing us a check for those trucks. But again, Bo, to answer your question directly, if we are providing you with trucking services, that's just going to come off your settlement check. So again, if a truck costs 25 cents a bushel, let's say, you will receive a settlement check for 25 cents less, whatever your settlement was going to be, the same way it would be on basis. Bo, does that answer your question? Looks like I see you there in the screen if you're nodding. This is really, some of you in co-op land, as we say, right, in central Illinois, right around the Illinois River, that's not usually a factor for you unless you're just trying to get off a lot of bushels at harvest beyond what trucks you have. But those of you guys out there in the Western Plains, or certainly in the Northern Plains states, where your length of haul is a lot larger, that certainly comes into play for you more. We're right at time here. So I just want to wrap up by saying, again, thank you all. For most of you guys that are going to be listening are our own customers already. If you've already signed up for your 2023 managed pricing programs, that pricing is going to start in January. If you're saying, what do you mean price is good right now? I would recommend you go do an HTA then through us, but pricing is going to start at the end of January or first day of trading day of February. Um, if you've already signed up and you want to add bushels, give us a call, shoot us a text later, and you can do that. If you haven't signed up yet, you can still give us a call, text us, anything like that, and commit more or new bushels for the 2023 crop. And don't forget, for those of you that are here to, because you do a lot of managed pricing programs, if you deliver to more than one grain elevator and you're trying to avoid margin calls and have someone else carry the hedge for you, you can place your HTAs and collars and accumulators. And if you've always sold cash or you've just always done managed pricing programs and you're not super familiar with how those things work, that's what Mo and his team are here for, to help guide you through that. We don't have a crystal ball of what's going to happen with the markets, but we want to give you more information and more capabilities to execute either what your grain marketing plan is that you already know and love to do, and we're just helping you play the basis and avoid margin, or whether you just aren't really familiar with that stuff and you want to do a little better in your marketing and get a little more guidance on that. So again, we're growing a lot. Thank you guys for your business. Whether you're doing a managed pricing program with us, placing pricing tools yourself however you want through them, whether you're doing some consulting with us and getting analytics on what your cost of productions and your break evens are, or if you're also using our trucking services to help you haul grain to different elevators, or any mix of those, this is a time investment that we've made and that you've made to learn, because we want to continuously, as we grow, provide a better product and service for you to do these things. We are not a commodity brokerage out there trying to guess where the markets are going, because that's impossible. But you know what? As Mo tells a lot of our customers, you can't go broke making money. And we want to help you make good decisions there, because it's really, we know how difficult those decisions are, even though our hands aren't in the dirt with you, even though we're not 16-hour days in the field at harvest. We're working 16 hours days here during harvest, trying to fulfill all that. And we're right there with you guys. And we want to make things better as we continue to grow. So if you think of any more questions outside of this, Ryan is always available as a resource to you through us to do things. And we're always here for most of those questions too. We really want to build a bigger community. And one other thing I want to mention, there are guys here just sitting on this call right now from 800 acres to, I'm not going to name names, but in the tens of thousands of acres live on this call. You guys are all connected through us, and you see us out there. If we haven't met you in person yet, you're seeing us out there on TikTok and social media, visiting all of our different customers out there. All of you, by being our customers, are connected to each other. So don't just listen to the coffee shop talk locally and get that backyarditis. That's really important. But if you want to hear from someone what it's like out where Darren is, in Southwest Kansas, or what's going on right now in the Dakotas, or man, how are they pulling out 275 bushel yields in, Eastern Iowa? We are more than happy to connect everybody, because the more we can all come together with these things, the better everybody can do. And you're not alone out there. And you know what? We're not farmers, but you're not alone with us either. We care about you guys, and it's the only way we're going to be able to grow our business. So again, thank you for your time commitment. We know you guys are busy out there, and you all deserve a really good rest after a pretty crazy harvest out there. Ryan, any last words before we sign off?
No, thank you for the time. And as Nick said, I'm always available. I hope we can start doing this more frequently. And if people want updates on, what the status of the pricing program is throughout the year, or if anyone wants to ever do another session, like a breakout session on kind of talk us through some of the derivative strategies, the future strategies that are being employed in the program right now, and how I might be able to kind of replicate those for myself and for some of my other bushels. That's something we'd look to add. Again, really appreciate you guys taking the time. And again, transparency is the reason that we created the programs the way that they are, because it's your grain, and our job is just to help you manage it better.
Well, after 3 days on the road with Mo and driving 8 hours from Omaha back to Chicago, I think I've officially lost my voice today. So we'll be following up with everybody. Hey, guys, we'll see you out there. Follow up with your questions. We're always here for you. Take care, guys. Thanks.
Grain pricing tools, no margin, play the basis. Farmer's Keeper. Click the link below to supercharge your grain marketing.